Should have fixed it. We should be live right now. We're going through a couple of technical difficulties, but everything should be fine by now. Or at least let's hope so. Should have fixed it. We should be live right now. There we go. Good, 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 good. Nice. Market seems to be cooling off a little bit just before, but pretty much flat on the day. And we're seeing a little bit of sell-off, just like, jitters before the CPI results, but nothing to be scared of at all. Bam, bam. It's gonna be an interesting day for sure. Oof. Expectations for CPI today are pretty simple. We're expecting a 3.1 year over year and 0.1 on a month-to-month basis, but the important ones are going to be core, which is expected at 0.2, which is still a fantastic number for the month, and it'll be the same as last month as well. We're expecting at 3.4 on the core, which would be fantastic. Now, markets are quiet right now. It feels,
At
Nvidia showing a
8:30
little bit of
a.m. Eastern
weakness.
Time, we get US CPI data. CPI year-on-year forecast 3.1% on the prior 3.3%, with a range of 3.5% to 3%. CPI month-on-month forecast 0.1% on the prior 0%, with a range of 0.2% to 0%. Core CPI year-on-year forecast 3.4% on the prior 3.4%, with a range of 3.5% to 3.2%. Core CPI month-on-month forecast 0.2% on the prior 0.2%, with a range of 0.3% to 0.1%, and US initial jobless claims forecast 235K on the prior 238K, and US continued jobless claims forecast 1.86 million on the prior 1.858 million. So looking at some commentary ahead of this release, UniCredit say we expect headline CPI inflation for only 0.1% month-on-month in June, which would take the year-on-year rate down to 3.1% from 3.3%. Core CPI probably rose by another 0.2% month-on-month, with the year-on-year rate likely unchanged at 3.4%. The headline index will be weighed down by a 4% month-on-month fall in gasoline prices, while food price inflation likely remained contained. Core goods price inflation was probably broadly flat again, as the ISM Manufacturing Index's prices paid sub-index fell back to 52.1 in June from 57 in May. Used and new car prices likely fell. Core services price inflation remains high, but is easing gradually. Housing, 43% of the core CPI basket inflation, is easing, but it will take time for lower market rents to filter through to average rents. Non-housing core services inflation should continue easing gradually as the labor market softens and as firms find it harder to pass on input prices rises to customers.
Bam, 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 na, 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 na. Holy, it's gonna be an interesting one for sure. Let's put it up here. Bam. That's bigger. Should give us what we're looking for right there. Oof. We're a minute and 30 seconds away from the market data. We're gonna see that number on top of me go crazy. It's gonna be cool, cool, cool. Hopefully we see some movement in the markets towards our pockets, but we shall see. Oof. We are a minute away. See, market likes to like make some moves beforehand, just to like spook. But so far, nothing major yet.
1 minute remaining. I'll lead with US CPI year on year.
We want low. We want low, low, low. Oh man, it's pretty size. It's like we're for like 100% invested at the moment, so that we would take a massive hit if markets were to go the other way. But there we go. Markets have been expecting this the whole week, and Jerome Powell did not signal anything based on his appearances. So hopefully we get it to the upside. This will give us an instant reaction, and then we'll see how the market overreacts in terms of
10
the
seconds.
actual numbers. 10 seconds. Here we go. For the Nasdaq and the Qs, it'll be interesting. Maybe we can make a couple of trades here. What's my position right now? Yeah. Ooh, that means
3%, 3%, lower than forecast, 3.1%.
Let's
CPI
go.
month on month, minus 0.1%, minus 0.1%, lower than forecast, 0.1%. Core CPI year on year, 3.3%, 3.3%, lower than forecast, 3.4%. Core CPI month on month, 0.1%, 0.1%.
Jobless claims came in
lower
lower,
than
which is
forecast,
good.
0.2%.
Not recession
downside in
fears.
dollar, upside in stocks. US initial jobless claims, 222K, 222K. That's lower than forecast, 235K. And US continued jobless claims, 1.852 million, 1.852 million. Lower than forecast, 1.86 million.
We're going to buy a
US
little bit
short-term
more.
interest rate futures rise after CPI data as traders boost bets on Fed rate cuts.
We're getting cuts. You might get cuts sooner than expected. This is great news. This is fantastic. Wait, is that negative? No, wait a second. Oh, is that negative 0.1 on the month on month? No way. Are we getting deflation? Crazy. Wow, this is why it pays to be ready, boys. Wow, that's great news. And then the core came in at 0.1, which is even lower in the year on year.
Saw the data, which was June of 2020.
That's a minute. We're gonna go
CPI
here.
core, you just want to match or less. Like if it comes in 0.3,
No, it came in better than expected.
Against the dollar after US CPI data.
Oh, we're getting massive bumps. I don't think the market was expecting this. Like I think we're expecting probably in line, probably a little bit lower, but this is.
Goodbye, spiders tomorrow. Jobless claims low, CPI low. It's good news. Let's go print.
And rate futures
CPI
rising
month
at
comes in
-85% chance of a September Fed rate cut after CPI data, up from about 70% before.
Core year over year comes in at 3.3 versus 3.4 all week, and jobless claims come in lower than expected. Let's go. That's great. 222 on jobless claims. Revision.
So that tells us there's no recession.
CPI 4.651%,
revision down
4.651%.
Let's go.
8,000 lower than expected. Let's go.
Let's go.
Bro, okay, just in transparency, I got like $700,000 in like 3-week call options on this stuff. So let's go.
Everything tells you it's
Very
up.
good. All right, I'll get into the detailed report. Let's jump into this for a moment.
And now it
Should have
equals
bought
that
some
level.
more
3%,
TQs.
3% equals that low I was referencing before I saw the data,
Nice.
which was June of 2023.
We got the
Friday, smaller
data.
number
I
down to March of
mean,
21, when it was
we go
2.6.
up today for
Year-over-year core,
sure.
3.3%. Our
Question
last
is how
look
much,
at
but
3 years.
fantastic
US
news. Let's
2 to
go.
10-year yields fall at least 10 basis points on the day.
Back to April of 21. Now let's look at claims.
It'll be interesting. Let's have a look at Tesla real
That's minus
quick.
17,000 from the revised 239,000. 222,000 is the smallest initial claims since the
Tesla's
third
got to
week
be
in May.
pumping on
Finally,
this news
continuing
too.
claims, it is now up
Yeah,
above 1.8
for
million for
sure.
the fifth consecutive week.
We got the potential entry was like around here, 260. We didn't
And
get
super
to
core
260.
inflation month on month, minus 0.154%, minus 0.154%.
Damn,
Oh, my
let's
friends, we're going
go.
into detailed categories because we need to categories. So obviously,
So after this
Let's
release,
go.
the Dixie in pre-market trading down 0.56% at 104.4.
Wow, that's fantastic
And
news.
the
Let's
S&P 500
go. What a
up
day of work, boys. What a day of
0.38%
work.
at 5,661.
And my options are not bad. Oh, my options are not in. Let's go. Oop. We need to make that go down. Get that down. Let's go. TQQQ sitting at 85. that's $400 a pop. They were sitting at 266. That's let's go. It's gonna be another this is gonna be another $1,000 today. Let's fucking go. All right. Yeah, baby. You know, you study, you analyze, like, you know, and people look at this and it's like, oh, I just made $1,000. You get lucky, right? And it's like hours and hours goes into this, you know, and then all of a sudden it's for moments like this. You got to be ready. You put the money where it has to be, and then you execute on those trades. It'll be interesting to see if the market sells off a little bit right out the open, because a lot of people are going to be just exiting trades, you know. But
And
I mean,
traders lift ECB easing bets after US CPI and see 20 basis points in September.
ECB. Like, are we still
And we
close
have
to
posted the
cuts?
US
I mean,
CPI June report
the
on the feed
negative
for
one
all
is
those
scary,
interested.
right? The negative read is scary, but that's insane. Let's have a look. It's like it's on the negative, you know what I mean? Like it's negative 0.1, which is crazy. Let me take a screenshot of this, send it to my groups. Dang. Wow. If that continues, I mean, like if we get another month like that, cuts are coming for sure. Just because they have to balance the risks. They don't want to see potential drops here, like in the unemployment rate, you know? Like you don't want to do more damage than you need to. Man, this guy's gonna land the plane. He might not even need to land. They might just refuel up top and keep the rally going. Insane. You know what I mean? Wow. Just wow, you know? There might be an opportunity to buy here. Let's have a look at the TQs.
Noting gold also jumping as much as 1.2% after the drop in US consumer prices.
Yeah, we're gonna come. We're going down. We're gonna come. Potentially we bounce. We go back up. There was an opportunity to buy even lower here. Wow, when market opens, that's gonna be a great number. It's just gonna be a great day, it seems, you know? Unless we priced it in and then boom.
So Fed swaps price in more easing in 2024 after the June CPI, and traders see 25% chance of a third 25 basis point Fed cut in
Oh
2024.
wow, we're saying 3 cuts now. Insane. 5.2%. The 10-year is coming down a bit, 4.1, 4.2%, you could say. It'll be interesting to see. Maybe it's a good time to buy treasuries and just lock in those interest rate hike, like those interest rate rates for no risk, you know? Pounds up, euros up, everything's up. Insane. Even crypto is pumping today. Let's go. Everything except for oil. Oil is lagging behind a little bit. Huh. Interesting. But I mean, tech's up, TQs are up. How much is
So
the Nasdaq?
Treasury yields extending the fall. 10-year yield now down 8 basis points at 4.202%.
Let's freaking go. It's all about pump, 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 pump. Insane. Insane. Let's go. Small moments like this that pay the bills. Oh man, let's go. I mean, Marco, do we see continuous pump? Like, we could see it, but I mean, what do we have next week? Like, now we have PPI tomorrow. People are definitely going to be paying attention to that. It's interesting because we're getting deflation, like, you know, I wonder what it was. Here, let's look at Kevin's. Let's look at Kevin's.
This is way more than expected. This is fantastic. Honestly, like I said, even a warm CPI report here would have been like basically acceptable because well, JPower just doesn't care anymore about inflation. But this is like doubly welcome news on the economy. Here is the table set. Again, what we're gonna look at here is on the far right. Not to be political. On the far right, we're gonna get the seasonally adjusted month-over-month columns. We're gonna take a peek at that one, May to June. If you want unseasonally adjusted, you want the second column here after the weights. Okay, we're gonna start at the bottom because that's where the services are. You ready for this? Buckle up. Financial services negative 1.4. Let's go. Negative on services so far. Apparel services negative. Laundry and dry cleaning 0.3, 0.1 here on funeral expenses. It's cheaper to die now. Miscellaneous personal services 1.2. Personal care services 0.6. That's a little warm. That one's not great. Other personal services not great. This is the personal services. What are you all spending money on? This is ridiculous.
That's fine. Let's look at housing. Was it housing that took this down? Delivery services down.
Education, 0. Good thing the courses on building your wealth are not part of the education CPI survey. I'd be screwing that category up. I'm sorry. Prices goes up over time. Other recreation services, 0.1. Photography, 0.3. Oh my gosh, it finally happened. It finally happened. Pet services. This was one of those lagging categories that just kept cranking. Oh, negative 0.5. Wow. I think this report, you know, if you want to get political, this report just screams like elect Joe Biden. Which obviously, you know, some people who use political language would say. Anyway, I don't think that. I think you need something else. Anyway,
wow.
Anyway, recreation services, negative 0.1. Public transport, wow. Public transport, negative 3.2. That's great. Motor vehicle insurance, holy crap, dude. Still 0.9. That's still bad. But how does this report come in so low then? I mean, I guess the weighting is only 3% on motor vehicle insurance. Still 0.9. Oh my goodness. No. Motor vehicle maintenance and repair. I just had a tire replacement. Tesla. It's like $600. Like, what the hell is this? This is a scam. That's a scam. Tesla figured out how to make profit off service. That's for sure. Motor vehicle maintenance only 0.2. Car and truck rental 1.3.
The US Treasury 2-year 10-year yield curve narrows inversion, last at minus 32.6 basis points.
Water and sewer and trash collection 0.2. Here we go. No way. Shelter rolls. Holy smokers, boys and girls. Oh my god. Rent of shelter only 0.2. Oh my goodness. Listen, I'm gonna say it here, and I'm gonna say it here once. Buy calls on Enphase, Tesla, and probably AMD, not personalized financial advice.
Damn.
On Apple and Trade Desk. Just saying. Anyway,
like First Solar is gonna pump on this news. Tesla's gonna pump on this news. Interest rate sensitives are gonna pump on this news. Spy pumps on this for sure.
Sporting goods, negative 0.9.
You know?
Here we go. Used cars and trucks. That finally is following the monthly negative 1.5. This is an amazing CPI report. Negative 0.2. This is freaking amazing. Apparel, women's apparel 0.5. Men's apparel negative 1.2.
What's housing, bro?
That's crazy. Then you got furniture, down again. Sorry, restoration hardware. It's gonna take a little longer for you to pop it up. This is good. This is an absolutely glorious report. This is fantastic. Yes. More.
House of pleasure.
House of pleasure.
Big W pricing power. Coupon code expiring soon. Coupon linked below. Nice PP. Data dependent.
All right. Now, where were we? Let's see what the suits are saying. Okay. Oh, Steve likes this one, huh?
House of pleasure.
Steve would. Okay, so airfares fell 5% in June. Did I miss that? Oh, that was another transport category. Maybe that's why transport came in low, even though those car rentals came in high. I must have missed it. Oh, I missed it. Look at that, it was right there. Whoa. See what I tell you? Like I remember saying, what was it? American Airlines complaining about summer travel and revenue not necessarily being inside. This is like the worst industry to get into is air travel because it's so hyper competitive. People are so freaking price sensitive. Man. Anyway, if you're making money on options, check out the courses at meetkevin.com. Price goes up tomorrow. And by the way, I actually mastermind at meetkevin.com/mastermind. Let's do Wall Street real quick. So more good news. Key metric the Fed follows. Core services excluding shelter slightly down on the month. This is the best reading since August of 2021. The super core inflation is negative 0.05. Oh, after reading negative 0.04 last month, inflation is over. Let's see. Oh, yes. Oh yeah. Oh, Enphase 4%. Dude, at 113. Are you freaking kidding me? Legit. Yesterday. Hold on. Where is it? Just yesterday. This is crazy, dude. Look at that bounce on the 113 line there. Where is it? Short-term trades. Where did I mention 113? Was it the course of live stream yesterday? No freaking way.
You see, shelter came in massively. That's the thing. So we're waiting for shelter to pump in, and it's starting to come in.
For the people that wonder what these like alerts somewhat look like.
That's the beauty.
Yesterday, 12:19 p.m. Enphase keeps going. IMO good CPI and it's over 113.
Transportation comes down, used car comes down, electricity came down, gasoline energy has come down.
I'm about 450K. 113 on good CPI. This is freaking crazy. I'm about 450K. August calls weighted CPI might buy more. I may have bought more. I'm about 450K. August calls weighted CPI might buy more. I may have bought.
All right.
The Aussie dollar rises 0.6% to 0.679.
That's beautiful. Let's go.
The highest since January after US inflation data.
Like, this is insane. You know what I mean? So it's like we're definitely just getting negative reads now. Let's go, boys. Come on. Let's do this. Let's go. Insanity. This is fantastic news for markets. I mean, like, there's a reason they've been pumping like crazy. Wow. Insanity. Let's freaking go. Well, it'd be interesting to see now if it's time to buy some treasuries, you know? Try to get the upside on those treasuries. Wow. 85% September cut. Look, BPI is going to be really important tomorrow for us to continue this rally, you know? So we probably, like, I wouldn't be surprised even if we sell off into tomorrow because tomorrow might be the de-risking event, you know? BPI is going to be key. PPI is going to be super key, you know? It's going to give us an idea of what's coming next. But, I mean, if we look at oil has been behaving quite kind of nicely. So like, look, we're coming back. Potentially we sell up, we could, but I mean, like, this is good for markets, right? We're getting those cuts. So if you want to start positioning for rate cuts into interest rate sensitives, I mean, a couple of, like, months was
So the dollar
the
yen
right point.
extends the drop, now
Even
down
last month was the right point, but you're
1.5%
still
at
a good point to go
159.
if this continues, right? Let's have a look at oil real quick. What am I looking for here? I'm looking for WTI. You see, it's interesting because CPI doesn't get that many people through the door, but it's one of the most important events, This will drive markets for sure. Let's have a look. Let's look at crude light. CL BAP. And then we're gonna go futures. We're gonna go what next month futures. Let's go continuous. Because I do get pricing on this. It's like if we look at let's look at the daily just to have an idea. Because oil has been coming up, right? It came up in June. It was starting to come up in June. So maybe we see the impacts on July. Could we? Sure, but all of May we just saw the price coming down in the range of the 70s. But this continues, like, this is still an uptrend. You know? Even oil has been outperforming, it's like that's the thing. It's just like there been like contradicting stories in a couple of asset classes that just didn't make any sense. Could we see a correction right now? I mean, it seems like we're holding off just to continue to go higher, but market like those numbers. Like we touched resistance, like we bounced off the 505, but I think we can break that today. That's for sure. Wow. Let's have a look. Like, we've been consolidating between this range. Question is, do we break out from here and then continue to go higher? A breakout here will mean just massive bumps up. Pump it up. You gotta pump it up. You gotta pump it up. Nvidia up 136.72. Even crypto's up. Crypto's what? 2.6%. It's been super weird. I hope that it catches up to it like gets back in line. But it's been weird. Crypto's telling us something, and I don't know if the market wants to listen, or maybe we're just like moving like high risk into medium risk. That could also be one of the moments. You gotta pump it up and pump it up. Let's go. Yeah, this means that we should continue to see rally. No, I don't know how much rally do we see. I mean, we've gone up like pretty nastily up in the last couple of weeks. Let's have a look. Let's go back to the dailies for a second. But we've just been just racking up. We've seen a little bit of scares, but nothing major. We're seeing that decrease in volume too. This is not good. I mean, we're probably peaking at some point. The question is when, right? But it's interesting. You see the most volume when we were at the lows, and then it's like we're on the highs. We see that decrease in volume. Here, volume has been coming down, which is like, we could say it's a bit scary, right? But again, like it seemed like there are a lot of players were just getting out of the trades. A lot of people are just holding, right? But we are seeing that volume slowly ticker down. Interesting. This is trend line. Wow, it's great news. Great news. Then my options will come, probably sell at the open because we're probably gonna get massive volatility, and implied volatility is still gonna be high on those options. It's gonna be great. Let's have a look at what my friend has to say.
Si el número es negativo, ¿qué significa? ¿Que está viendo ya lo que es deflación o qué?
Yeah. Market's convinced. So we don't get a July cut, which is okay. Probabilities. But we're pricing in a cut by September. Damn. You gotta bump it up. Let's go. This is cool. I'm glad. Wow. Insane in the membrane. Let's go. Wow. Like this is moments where you make decisions, you know what I mean? You get this data, you can make decisions faster than the hedge funds. The hedge funds get in right after you. Bam. I mean, nothing is scary yet. I mean, unless we get a black swan, so far we are within the right sort of like trends, you know. You gotta bump it up. Let's go.
More. Okay. But anyway, so yes. Okay. Should inflation continue to be more benign, the yield curve could bull steepen more aggressively.
Look at the implied. What do you mean the implied? What am I looking at? What is this data I don't know of? Implied interest rates? Where can I look at that? Like I think we get the thing is just like I still don't trust that we are for sure getting cuts. I mean, I think that's pretty much high. I think market's getting a little bit euphoric just because they've been expecting it, but could we? Big question. There we go. Hey, we are not. At 81, you know what I mean? Like I think this is a little bit higher still because any bad number just gives the Fed a reason not to do anything. But the fact that unemployment is ticking up, it's a scary feat, you know? It's a scary piece of data. Markets are giving up
So
away some of
US
the
Treasury 10-year, 2-year yields fall to the lowest since mid-March, down 7.2 basis points at 4.208%.
we're retracing a little bit. But we're at all-time highs.
Also noting the dollar yen dropping 2%, session low of 158.4.
Ooh, dollar yen. Ooh. And that would have been a nice trade. Implied interest rates. Let's have a look. I'm not so convinced, you know. Why? You see, market was gonna sell off. Weird. We are selling off as traders are coming in, and we're getting close to the 2 hour. You know. Interesting. We could see the de-risking event happening today. That'd be interesting. Because tomorrow is that PPI is definitely going to shine some light in what we're expecting for next month. Damn, a little bit of sell-off, eh? We're buying at rates like this. I mean, like, it is it a good point to buy right now? Just come down. We gave away all the gains so far. Like, I bet you market does something in the lines of like it sells off during the day and then at the end of the day it rallies back again. You know, because like there was a lot of money that came into this. A lot of money that came in during the week. Bam. So let's look at the cues for a second. Wow, we gave it all. We gave it all away. Wow, that's interesting for sure. Yeah, we're coming in lower. Yeah, market selling off just before. Question is, do we buy here? Do we want to retouch the 500s and then bounce back? Interesting. What's even Bitcoin is showing weakness. Like we've just been coming up. Like it was I believe it was priced in. I don't think it was priced in to go into the negatives, you know. Wow. Wow, 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 wow. Bam. This one was good. Let's have a look at the report. No, it is. Look. Next release is on August 14. So interest rate. What's Tesla doing? Did Tesla give away all the gains? Like this would be a good entry point. If you get it right, this would be a good entry point. Are we just gonna get consolidation? Everything is giving up a little bit, huh? I think this is one of them days that we just go up, touch back down. Like this would be like if I wanted to buy in some more, this would be the point to do so. Feels like it, you know? We probably retests. It's the VWAP on the TQ. Bam. Like all of these people sold here. It's a lot of buying at the end of market. And then could we go back up? Maybe we could, you know. It's gonna be interesting to see what happens with the options here. Put up the options and see. Damn. Damn. We gave away all the gains. Weird. We're getting deflation. Is that spooking markets? Insane. It's interesting that the VIX is not moving, eh? That's super weird. Do we want to hedge this? Wow. I want to hear this. Let's have a look.
Stock futures higher. Year-over-year basis super core price measures down for the second straight month. That's the first time that's happened since last fall. After what do the bears have to say today? Let's see. Super core deflation, second month in a row. Yeah, we saw that. June CPI milder than expected. Shelter. You know, there were a bunch of institutions that were like, oh, you should hedge. You know, what's it called? Going into CPI. I'm like, nah, I'm going calls, baby. Oh, that's funny. Somebody here, sweetie. The 2 Nikki Leaks articles that set up the September cut were the tell. Yes. Yes. Yeah, that's. Price tires yesterday. 100 more per tire in 2.5 years. 400%. 400%. Bro, I just spent $650 on one damn tire. That's for my car. The plane's $7 freaking grand. $7 grand for a tire. It's like stupid. So yes, prices have gone up. Samantha Smith says, I wish you did remote work and need an auditor. Well, the thing is, you need independent auditors, so you can't hire inside auditors. So they gotta be independent. And so, like, if you're looking for a job versus contracting out an auditing firm,
Effective Fed fund rate
but thank you,
unchanged
I
at
appreciate
5.33% for July 10th.
Daniel says coffee or espresso. Espresso gives me tummy aches. I'm too much of a little baby. I can make a mean cocktail. Fully licensed Max. Bro, where were you when I went to Toronto? I was there. I'm like, I know if anybody's gonna come, I'm gonna get to meet Max. Nope, doesn't show up. I'm just like knife in the heart. Anyway. So stop with the fox, says McNabb. All right, we found him. We found Newsom. No. Okay. Do I think stocks are gonna go up or down today? Up. This is like there's no reason not to be happy about this. Yeah, I know we can argue. Okay, all-time highs, blah blah blah. Whatever. Look, the stock market will have a sell-off, but it'll probably be before the election. So do be prepared for that. Like at some point, this is gonna flip. Like Tesla's gonna drop again, 20% or whatever. The question is, it's gonna be 350 when it does, and then it just goes back to where it is right now, or does it go back to 200? I don't know. At some point, there'll be fear and panic and disaster again. All I know is that time ain't right now. So your boy Kevin got lots of calls. Inflation is the war, folks. Well, all right. Let's see. Hattie Dream, you were arrested but didn't fail to cover CPI from jail. Let's go! That's a good one. I like that. Hey, everyone, meet Kevin here. At the same time, somebody went, can I have a cigarette? So, let's see here. Is Enphase going to go through 113 or reject? Well, I can tell you what I said yesterday. I'm leaking my IP here, boys and girls. Stop this. So yesterday I wrote a list of price targets for the end of July. Absent a broad-based crash, I will read you the Enphase one. Breaks 119 to 130. Not sure if it'll hold until August earnings. So 119 to 130 is my guess by the end of the month. No, giving away my IP.
Give away all
okay.
those gains.
You lost me. You have to move to California. Good. Good. The more of you folks are anti-California, the more I buy the crap out of California. Thank you for not competing against me. Get out. California sucks. Everybody leave. Let's see here. Are you going to stream the Biden news conference later today? You mean like the Biden aid press conference where Biden reads the script? That's bad. I'm sorry. It wasn't even a good joke. It was also a lame joke. I couldn't even land it. Good friend always told me that comedy is all about. Or what does he say? Oh yeah, comedy is all about one thing: timing. Okay, so where is it? White House schedule. Okay, Joe Biden's public schedule. Wake up at noon. Oh, that's unfortunate. Okay. President departs White House en route to Convention Center. President holds meeting with Zelensky for 30 minutes. NATO press conference, 5:30. In-town travel pool. Yeah. Yeah, hell yeah. Let's go. 2:30? Oh, I don't know. That's 2.5 hours into Rust Wipe. I don't know. All right, what do we got over here? Somebody donated $4.99, and there's something about jail in here. What is this? You have
it's a good time to buy.
Call
Feels.
from me, Kevin. Do you accept the charges? GPI jail last year. Yeah.
CPI due later this morning. Joining us for a preview of the key inflation data, Michelle Girard, head of U.S. coverage at NatWest, as well as the CEO of NatWest Markets. Old friend. I'm trying to figure out, is it 20 years, you think, Michelle? More?
About, yes, Joe. I think it's been just that long.
Maybe longer, a lot longer than
Decades.
a lot of relationships this has lasted. When I read all your notes, and I got a lot out of it, but I was thinking if I were less of an expert than I am, there may be parts where I would need you to explain it a little better. So let's do that for viewers. And what I mean is, there's going to be the headline numbers, there's going to be the core numbers, there's going to be the year-over-year numbers, there's going to be the 3-month moving average, the 6.
I think that's it. We're gonna see what happens on market open. I think it's a good time to enter. I mean, right now it's mostly sellers getting out of the trade. Feels like it. The question is how many traders were in yesterday, and I think there was a lot. Couple more goals. A couple more contracts. If they come down, rebuy. Yeah, it's a good idea.
Hated Economist here. So in this video, we're going to be talking about the lumber market. Lumber prices are absolutely tanking out right now. We're at 440 per thousand on the July contract, somewhere between 440, 450. This is incredibly low. To be honest, I didn't think it was going to get much below 450, but yet today in the cash price, we saw trading all the way down to 438. Now, I left a couple of links down in the description to the bar charts graph showing both the current cash price and the July futures contract. Now, you have to think there's a lot of different contracts that are out there, depending on which one you're looking at and how that is going to, go into your economic analysis of what's happening out there in the economy. Now, when you look at, like, a lot of times when you go to places like, say, CNBC, what they will do is they will switch the contract, but you didn't quite recognize it. Like, they might have gone from July to September or something of that nature. So you really have to look to see which contract that they are quoting, because a lot of times they may switch to another contract and you're not quite realizing that yesterday it might have been July and today it's September. So really keep an eye on what contract it is that you are looking at if you're following lumber futures, because right now if you look at like the September contract, I think it's at 470 or something of that nature. At 440 per thousand. Mills are not making money at 440 per thousand, and I am actually recognizing this through the retail end of things. Today I got an interesting phone call from one of my vendors, and a lot of you who follow this channel for lumber information, this is the type of stuff that you like to hear, because today I got a phone call from one of my vendors who says, hey, we have a stack of 2x4 14 foot. How would you like one of these stacks, or the whole stack, like everything I got, for 440 per thousand? Now this was first thing this morning, and I'm thinking, wait a minute, like print cash right now, cash price is 440 per thousand. They're offering me essentially a unit of lumber for cheaper than the market has it future priced at. Right? Like, this is how desperate they are to move product out. And now I think about this particular item. It's a 2x4 14, which is probably the least moving unit of lumber that I could carry in my yard.
Dollar
Like,
yen continuing its drop here to around 2.3%, set for the biggest one-day drop since January last year.
Nearly as common as a 12 or 16 or 20. Now, considering that most of the time 14 foot and 18 foot, when it is purchased, it's used for plate stock. They don't really care what length you get. But if you're not building a lot of houses, or there's not a lot of housing demand out there for new construction, then those items, like those less demand items for plate stock, like a 14 foot and 18 foot, lumberyards aren't going to really want to carry those particular lengths because they don't move, right? Like, the retail customers aren't going to buy it. And if there's not a lot of home building happening, they're not going to buy those unit of lumbers because they just sit on it. And we're the exact same position. Like, the buyer I went to him was like, hey man, look at this, is a hell of a good deal on this unit of lumber. Goes and does the recall on it to see how much we've moved in the last 2 years, and he was like, yeah, it doesn't even justify, we're still not going to carry them. We just don't even carry the 14 foot unit. So that's one of the things that I'm starting to see happen, along with shortages. So not only do you have an abundance of some material that isn't very common, but then there's shortages of other things that aren't as likely made by the mills. So like a 2x4, 2x6, standard and better, they'll run those all day long, considering that that's the common items that are sold, right? After you start getting into the wider lengths, the 2x8, 2x10, 2x12, these ones, not so much demand for those as much as they are for the 2x6 and 2x4. So now when you go to look for a unit of, say, 2x8 16s, those things may not be as prevalent out there on the market, right? Because the mills aren't running as many of those. So here you're starting to find it. Overstock in some things and depletion of inventory in other plations. At the same time, you're seeing these prices coming down dramatically. Tells me that the lumber market is not doing well. And the reason it's not doing well, again, it's because the new construction market is very much in a very cautionary position. Is that the way to say it? Like, the builders don't want to build if they cannot find the buyer traffic. Like, if there was buyer traffic there, the builders would be in it. Because you think about it, home prices are expensive. Right? And if you have an expensive product that you are building, then you would want to build more of those. But if you build an expensive product and only to find out by the time you built it that you don't have a buyer for that product, then most likely you're going to hold back on your idea of creating those new products, right? I don't care what business you're in. I mean, whether it's a home construction or anything out there, this is the same thing that's going to happen. So these builders are looking at that very thing. They're like, yeah, even though lumber prices are cheap and home prices are elevated and this is room for profit, if you have at the end of your project no buyers for it, then why even start? And this is what we are experiencing now. Go and take a look at permit issuance. I should have gotten the links for those. I'm sorry, I didn't do that. But if you just go permit issuance and then type in FRED at the end of it, Fred, right? This will take you to the Federal Reserve education site, whatever. They have all the different types of graphs you could ever possibly imagine. But look at permit issuance. Look at housing starts. Both of these are down comparatively to where we were just over the last few years, even during the pandemic when things spiked. Prior to the pandemic, we were at those levels. Like, even in a lot of places, we're probably coming down below the pre-pandemic levels. There's less homes being started, right? Less homes are getting permit issuance for. This is a sign of a slowdown in the new construction market. Now, what I find interesting is a lot of times when we talk about crash, like I even put crashing in the title of this video. So when we think about lumber crashing, right, we think about it, okay, crashing is a price dropping dramatically, right? To us, when we think about it, market crashing, that's what we think, right? Prices come down dramatically. But really, we have to think about it in a little bit different sense. Is crashing really prices coming down? Or is it a stalling out in activity? And I think that's probably a better indicator of a crashing economy, is how much activity is slowing down. Think about home purchases, like how many mortgages are being created, how many new home sales are taking place. That's the crashing housing market. Less activity taking place within this market. Less mortgages being written, less home purchases taking place, less homes being started, less permit issuance taking place. This is the crashing housing market. It's not the price like a lot of people would look at. They're thinking, okay, I'm waiting for the crashing housing market to take place. No, it's crashing right now. That economic activity that's not happening within the housing market, that is the crash. Now, we recognize it in two different fashions. People want to see the prices come down. That may not happen. There's a limited amount of inventory out there. And as long as you have a limited amount of inventory and you have a demand coming from all the people out there who don't own homes, regardless if they can make the payments or not, they still want the home, right? As long as you have that going on, you're going to have elevated prices. Limited amount of inventory and an unlimited amount of demand. Now, whether or not that demand is capable of doing it, that's relative. But they want to be there to buy those houses, regardless if they can do it or not. And unless you're bringing new inventory in some way or the other, whether it's from new construction or foreclosures or something of that nature, you're not going to find where the housing prices can come down because the inventory levels are just not allowing it to take place. So how are you going to get new inventory? You're going to have to do it with new builds. How do you do it with new builds? You're going to have the builder sentiment turn positive. Especially, it's pretty much turned positive in every respect except for buyer's traffic. And now what's going to turn buyer traffic around? The idea that they will be able to refinance into the future. They know they don't like these interest rates. Everybody knows that, right? But if they could refinance into the future, they would be willing to accept the interest rates at the levels that they are at, with the idea, with the hopes, with the dreams, with the belief that they would be able to refinance that into the future. And if they have a true understanding within them that is communicated to them that there will be interest rates drops going into the future, they would start being active within the housing market. So until that happens, I just don't see where the builders are going to take advantage of these high prices, considering that they will not have or believe that they would not have a buyer at the end of the project. And that is concerning to them the most. Keep an eye on these lumber futures. We're about ready to end this July contract next Monday, this Monday coming up, so like in 5 days.
something like that. Whatever happens Friday is going to really tell what's going to be taking place throughout the rest of the summer when it comes to the lumber prices, because everything in the system at that point is going to have very inexpensive lumber. Depending on how fast those retailers can turn their inventory over, which is really slow right now, which is the reason why the prices are coming down, it will take time for those cheaper prices to come into the market. However, this summer is going to be cheap lumber prices, and nobody's really building. It is like, what you're going to find from this is ever-increasing amounts of shortages taking place within the lumber market. And at some point, when that turning around of what it is that the market is feeling about interest rates and how it is that they can refinance into the future, the moment that shifts and the builders are going for it, you're going to find that the lumber prices are just going to explode. Because you can already see it happening. Like, the limitations are now in the market with oversupply in the stuff that nobody really uses. It's happening right now, guys. Like, I don't know how else to explain. Here we go. All right, let's read some of these comments here. Let's cruise up to the very top here. All right, Brody, thanks for being here. Yeah, thanks for hitting the like stream, because YouTube will, yep, that's the comment we pinned there. Thank you so much for that comment there, Brody, giving me the opportunity to pin it up there. All right, thank you. What I mean is thank you for your channel. Well, thank you very much.
Oh man, all right. Thanks very much everybody for watching. Hope you had an educated stream. Peace out.